What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, the people's champ of Wall Street, Dave Bartosiak. And today, my friends, we are talking about SBUX. But first, I gotta figure out, I gotta get this off of the, oh man, I am all messed up here. I'm trying to get this straightened out enough so that these ads don't pop up, right? That's always my plan. And there we go. Okay, so welcome. I hope everybody's got their coffee. We got macchiatos, we got chais, we got, well, tell me what kind of coffee you got. Put it in the chat here over here on the left. And hey, this is the only place that we hang out in the chat. No, sir. We are also available on Discord pretty much 24/7. That's discord.gg/little p, big B, W, C, M, little S, and a G. I know it's a silly link that I need to make cooler, but that's what it is. So we're always in there, always hanging out, and always rip roaring and ready to rock. Oh my goodness, that's right. We don't have any coffee music on. What do you guys think? What should the music be for today? What's today? I knew I forgot something. Oh, we can't be rocking out. We're not gonna rock out too much, right? Kyle, how you doing? Coffee. What's some? You need some Mobo Moga. I don't even know what that means, bro. That sounds like it's like very exotic dance, like something going on. Oh, some Brazilian music. There we go. Romario. I feel like I could do that. Romario Radio. Is that a thing? I need, what do they call that? Like bossa nova? I don't know. What are we going to play? Something like that. I'm going to figure this out. Google it. I know we're totally going to find this music. I need some music. Anyway, I feel like I'm going to click on something that's going to be terrible. We're playing Brazilian beats. That's what I'm clicking on here. Here we go. There you go. This is very coffee shop, right? We can rock with this. Just little background music. All right. Hey, Aaron, how you doing? Afro Boricua. What's up? Last time I said the word Boricua, I was listening to Big Pun and yelling it out loud. Joker, how you doing? Cafe latte from SBUX. That's what I'm talking about. Okay. All right. Good. I can feel the energy. I can feel the vibe. Now, first thing, why is Dave looking at the 10-year? You know, throughout the course of the day, I'm constantly looking at charts. So I apologize to you folks if you only want me to talk about SBUX, because that's just not. It's just not going to happen. Because I go on all sorts of tangents, and that's part of why people like coming here, because it gives you a little break in the trading day, I suppose. Can talk some madness, and So what am I looking at today? So this is the thing. Actually, this started with this last night in my write-up. So just look at the general shape of this. This is dollar yen, which basically just dollar strength, right? So up this way is dollar strength, down this way is dollar weakness. So I'm looking at this off of the big move from election day basically to December. And then drew fibs, and if you notice, its market's kind of bouncing around in there. But here's what's happened recently is you're getting dollar weakness, continued dollar weakness. And look at the overall move here. Just remember this. Up, down, wiggle, wiggle, and then down, right? Okay. Up, down, wiggle, wiggle, down. These are very technical terms that you have to understand. Up, down, wiggle, wiggle, down, okay? Now let's look at the 10-year. Up, down, wiggle, wiggle, up. Up, my friends. Up. There's been a split. Something has happened. Of course, I could put this on the same chart. I'm going to have to get rid of some stuff, but I could put this on the same chart. I got rid of everything. That's okay. Settings. Comparisons. Check it. We're going to compare this to USD/JPY. And I suppose we could do this. So the actual percentage move should not concern you. Don't worry so much about that kind of stuff, okay? Don't worry about it. But what you should worry about is just the general direction, right? So the overall sort of direction of downside, this starts to creep up. So does the market, or the yields. Creep up and a down. There you go. Creep up and a down. A little bit up, a little bit up, a little bit down, a little bit down. You see, you're getting it, right? And then something happens right around November, and this correlation has broken down, okay? So what the heck is going on here? You're seeing dollar weakness as yields are starting to run away a little bit, okay? Personally, what do I think is happening? I think you're going to see this yen pair dip a little bit lower, BOJ intervention, and this bad boy comes down. I think that's what you're going to see. Because the 10-year up at 2.64, I saw a note out of, what was it, Ray Dalio says that, okay, it's over. Now here comes the bond bear market. I think it's a little, I mean, he could be right, but I think he's jumping the gun just a little bit. But I see why he says that for sure. Of this break, I could see that. So just something that's in the back of your mind. You know, you can't look at these things in vacuum. They all relate to each other, my friends. They all do. So just something to keep in the back of your head when you're looking at a macro approach to the markets. You got to think about these things. These money flows going from point A to point B, and you got to keep that. All right, so we're going to have this on there. We need our commodity channel index, and we're solid. That's basically all we need here. Okay, so that's enough of the 10-year. The task at hand, my friends, is SBUX. Now, before we get into the chart, the technical chart here on SBUX, let's go over here. How much stress is it put on equities? Nah, not too much. If the bond market starts to really sell off, it's good for equities. You're going to have a tough time finding a bear case for equities here. You're going to have a tough time. You can find it, but you got to dig. You got to dig. Dr. Paul, how you doing? Kurt? Ranjit? Man, everybody, look at this. Everybody's here. Wow. Trevor, Aaron. Everybody. Okay. I'm actually liking this music now all of a sudden. I feel like I need to, I don't know. I feel like I should be walking around like a small town in Colombia or something. Or obviously Brazil. Or maybe I'll just go down to Lincoln Road a little bit later on today. Get my exposure that way. All right. So let's kick things off as we always do on the price consensus and EPS surprise chart here on SBUX. Black line corresponds to the right y-axis, which is price. Green arrows, earnings, beats. Red arrows, can't find one because there are none. That's right. 20 quarters in a row, SBUX beating expectations at earnings. So I think it's a safe bet to say that SBUX is going to beat earnings after the bell mañana, which then we will take a look at Friday morning in our morning after. So if you're around, wake up and hang out with us. If you're not already hooked up with the emails, letting you know when these are happening, livetrader@zacks.com. Shoot me those emails. I'll let you know what's going on. Lorraine, how you doing? Welcome. We're jamming out to some Astrid Gilberto today. Astrud Gilberto. I have no idea how to pronounce any of this. I feel like I'm doing all right, though. Black line corresponds to right y-axis. We covered those. Now, what's this left axis about? Well, that's EPS. That corresponds to these multicolored lines, which represent the evolution of our Zacks consensus estimates over time. What jumps out at you? Growth. Solid growth. Year in, year out, growth. But what's happened this year? These estimates have started to kind of slide down just a little bit, right? As the stock has taken an overall sort of downside trajectory. But look at this. Bloop! There's a heartbeat, my friends. There's a little bit of a heartbeat here into 2018. I'll let you guess why. There's a little blip. Yes, tax cuts, of course. Everybody's incorporating that. Everybody. But really, what I believe that's going to relate to, this is going to be a this and then this, right? I think it's a blip up, and then, you know, it's a one-time adjustment, and then we're trailing. Okay? I think that's what we got going on. Dean, how you doing, man? Howdy, howdy, howdy. So I'm not sold on this little blip up, because I think everybody's getting a blip up. You get a blip up. You get a blip up. Detailed estimates page. I got a little ahead of myself again here. StarBucks. Zacks rank number 3. Hold right now. D in value. B in growth. A for momentum. Top 35% of our Zacks industry rank. They got them lumped in with restaurants. Okay, I guess, right? Again, they're reporting after the bell tomorrow, so you got the rest of the day today and tomorrow to figure out what you want to do. Yeah, lots of stuff happening before the bell tomorrow, Kurt. Lots and lots and lots. Mr. Wallace, how you doing? StarBucks sales estimates. So year over year, we're looking at 7% revenue growth here for the current quarter. Next quarter, 8.59. Current year, 869, and next year, 905. Solid numbers, decent growth. That's kind of why StarBucks is always commanding a little bit of a valuation premium, which is what we will see a little bit later in the show, because they do have that growth. Earnings here, current quarter 9.62% earnings growth. The next quarter 13.33. Current year number rounds about 16% growth, and next year modest 15.28. Not too shabby, my friends. If you look at the overall agreement, what does this mean? So this is actual analysts. What number of analysts has come out and done anything? So just over the last week, you have an analyst increasing their estimate for current quarter, next quarter, current year. Well, 2 have done so for next year. If you look back at the last 30 days, you've got 5 people upping the ante for next quarter, 7 for the current year, 6 for next year. So that's a lot of positivity. On the negative side, though, could this be the same person? Drop next quarter's number. 2 people drop in the current year number. 2 people drop in next year's number. So why is this Zacks ranked number 3? Well, this is why. It's very hard to not have agreement in these numbers, and for stocks to be better. You know? If you got them arguing, there's not much agreement. There you go. Now, this is the kicker here, the magnitude. So, based on all these moves, you know, somebody moving a little bit to one side, somebody moving a little bit to the other side, what's the overall magnitude of that effect on our Zacks consensus estimate? Current quarter's gone from 59 cents to 57. Next quarter from 51 to 49 to 51. So kind of a seesaw back and forth. Current year number 233, 231, 238 to 239. Next year's number from 264 to 262 up to 275. So plenty of bullishness out here for the current year and next year. So I do like it. Not a huge amount of bullishness. Showing up a little bit more in next year than the current year. Okay, so if you notice how this says September 2018, so while a lot of companies are rounding out their fiscal year and reporting on their fiscal year, StarBucks did that a quarter ago. All right, a little deeper dive here on the revs. Look at this real crazy growth, 2014, 2015, 2016. And then it slowed to 5% in 2017, Now you're looking at 8.69%. 2018, still a solid number, looking pretty solid the rest of the year. So these are all good, nice linear sort of progression to the upside. Liking the revenue story for sure. EPS. EPS 2014, look at that. Solid 21%, 17.20. Slowed to 8.9 last year, and now this year it's looking great. 15.3. They're forecasting the same for next year. So looking for 57 cents. A year ago, 52. Then we got 51, 64, 65. So nice growth. Out towards the end of the year is when it accelerates. But a nickel is a nickel, my friends. Still looking pretty good. Pretty good. Pull up the charts. Pull up the charts. Forward 12 PE. Like I said, a little bit rich here on Starbucks, but that's basically where people model Starbucks, 25 times earnings. 25 times forward earnings. I mean, that's just what happens. But look, it's actually not that rich compared to, relatively speaking, for where Starbucks has been in the past. You don't see this on too many charts. Let me get a little bit more data here. Let's go 10 years out. So we're at this sort of 25 times. Basically 2016. Look at, I mean, all these years. Starbucks trading well above where the valuations are now. So on a relative basis, we're not really stretched that much. If you think about it, it's almost where Starbucks was in 2009. How many stocks can you say that for? I'm going to tell you how many. Not many at all can you say that for. Look at where the S&P was. Back in 08, when Starbucks, or 09 rather, end of 09, Starbucks was, look, this looks like 22.5, 23, right? Look where the S&P was, basically 14. Now the S&P has swollen to 19 times, and Starbucks is basically right where it's at. Interesting. Didn't realize that. One more? Sure. Revenues. Not that crazy. 4 times when the S&P's at 3.6, and again, relative, on a relative basis, not as rich as it has been in the past. Is that saying that we should be paying 4 times earnings for Starbucks? If you get a little bit of growth, which they do, why not? So same store sales is the number that you guys should be looking for. Ooh, let me see. Ryan. So we got a guy named Ryan. His name is Ryan, but I call him Ron, just because that's what I do. And he taught me all about our non-financial metrics surprise data here. And look at what you could pull up. Or I could pull up. You can't pull it up. I can pull it up. Uh-oh, I blew it up. Don't tell me I blew it up. Oh, no. Perhaps I blew this up. That's okay. We're going to wait for that to unblow itself up. But if it did, that's okay. We got lots of other stuff we could talk about. Let's look at the chart first. And you see I got some fibs here. I must have drawn them a long time ago. Let's see how long ago I drew them. Oh my goodness, look at this. Look at this. This is a fib from August. Oh, this was like a flash crash situation. I don't know if you guys remember that. Fibs off a flash crash act like they don't ever come into play. They do. Look at that. So you basically drew that from there. I know this is weekly, but this is going back into 2015. Look at that 50% came into play once, twice. You get the 61.8 down here. Again. The 50% come into play again. So what do we have? Well, these multi-year highs is what we got to look like. What we got to look at? We can drop back down onto the daily. Today can be one of those days where everything wants to be crabby with me. Might be. Yeah, same store sales. This is what I want to talk about. I want to see if this got fixed. Did get fixed. Woohoo! Yeah! I don't see same store sales, do you? Oh, man. Company comparable. There it is. Look at that. Look at that. Wunderbar. Spectacular. So now we can see where the estimate consensus was and where it's come in at. So here's the problem, is that last quarter it came in at 2%. This is really 3% is what we're gunning for. So last quarter came in at 2%. Quarter before was 4 when they were looking for 4.9, 3. So I can almost guarantee you that same store sales are going to disappoint because they always do. What's up with that, huh? Look at this. Just terrible. Disappointment. Expect some disappointment on same store sales. Interesting. What has the effect been to the stock? It's been a little negative. Look at this. Negative, 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 negative. Some negativity here. Whole lot of nada going on. Can we go further back? Sure we can. Still negative. Okay. I just wanted to show off this cool little thing for Ron. But I'm sure Ryan's not paying any attention to the video today. I'm going to force him in here one of these days. He said he would hang out, actually, and he lied to me. So when you see him, we're going to heckle him. Consolidated surprise, which is what we normally use, but I just wanted to give you that data point so you all had that heading into this report. Earnings. Inline, 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 inline. Small beat, inline. We know that's going to happen. Revenues. Small dip, small dip, small dip, small dip. So you basically can just ignore this, right? Doesn't matter. Nope, don't care. Don't care earnings. Nope, don't care. Sales side of things, though. This is where the disappointment's been. Kind of always disappointing. How far back? When's the last time Starbucks had a really good report to the upside? December of 2014. I mean, that's a total different universe. December 2015 is a 4. Okay, oh, I'm sorry. I totally missed this. March 2015, nice little jump. But again, it's been a long time since you had a lot of positivity out of Starbucks earnings. It's been a long time since they had some real solid same store sales growth also. Look at what's happening, chart. Now this one wants to blow up on me, huh? Let's go. You guys can give that another shot. Let's go to where I know it's not going to disappoint, and that is a bar chart. Change from the stack view to the side-by-side. This way you got calls on the left, puts on the right. 60, 61, 60, 50, 60, 80. We're going to use 61 here, folks. $127 by 130. Let's call that 128. 173 by 174. We're going to call that 173. 301 is what you're looking for on a $61 holler, or 4.93. Basically, 5% is what you're looking at. 5% or $3. I'm going to subscribe to the KISS method today. Come on, man. Let's do this. You know, this is why nobody likes you, Internet Explorer, with stuff like this. And I know everybody's like, Dave, why do you always use Internet Explorer? Like, coming in like to the 90s. Oh, your chat just hangs when you're trying to connect? Have you tried reinstalling your Discord there, PJ? Maybe that's what it is. Look at my interwebs, man. He's just not happy. This is just not happy. No, it's not my bitrate. Don't you start bitrating. My bitrate is gorgeous right now. I got plenty of green on the screen, my friends. I got 6100. That's my bitrate. 6200. Unless you're yelling at PJ about something else. It's just you. Okay. Change this from a side-by-side to the stack. This way we get calls on top, puts on the bottom. Let's catch some post-earnings drift, my friends. Go out to the February contract. Now I want you to look at something here. It's trading about 61. And the market is basically pricing in a move, a $3 move. Right? Okay. Now, if you think that Starbucks is getting a little top heavy here, one way to play it would be selling an out of the money call spread. But you don't necessarily have to go very far out of the money. So I'm going to give you an example. You go all the way out to the 64.65, which is kind of out where the market is pricing in, right? You're only going to get a 17-cent net credit with 83 cents at risk, right? Not a really solid risk versus reward. But all you would need to profit from that is shares of Starbucks would have to close at or below $64. But what if you really think that Starbucks is going to go down? You think it's got a firm cap on it now? Is there a way to profit from it more aggressively without using a debit spread? You are in luck, my friends. There is. Let's erase this. So what if the bears out there sold $61 call for 143, simultaneously buying a $62 call for 103? They would pocket 40 cents. Now, the difference in strike prices is $1. But because you have that 40-cent credit, that means you have 60 cents at risk. So in this case, you can make 66% on this trade, and all you need is shares of Starbucks to close at or below 61 at expiration. Here's a bear credit for you. Short Feb 16th, 61.62 call spread for a 40-cent net credit. Now, every time I do this, I have to drop this a little bit lower to show you guys the effect of time on this. So here's the front week. So this is going to expire right away. Okay? Immediately following the earnings report. Here's a 61.62. I think you're going to be pleasantly surprised here. If you sold the 61, you're going to get 132. If you bought the 62, you're going to get back 91 cents. Here's a 41-cent net credit on a 59 cents of risk. So here you can make almost 70%. And this is just going to be in a couple days. So this is a very quick turnaround. It's a higher credit with less time. That sounds cool, doesn't it? It should sound cool because it is. Here's your risk with this, though, is that the reaction is an opposite one immediately following the report, and then it takes a little bit for the stock to drift sort of in line with earnings. So a shorter term, which you can read as more aggressive bear credit, is short the February 16th 61.62 call spread for 41 cents net credit. Do you guys see why that's more aggressive, though? Anytime I'm just using poor words here. Anytime you have less time, whenever there's a situation where expiration is right around the corner, you don't have the luxury of waiting for the trade to maybe go your way. So what that means is that if this trade runs in your face, it's going to blow up immediately, okay? It's not going to be something where you can put it on and then a couple weeks can go by. You can say, yeah, I'll just hold it. Maybe you'll start to creep in. This gets you to that decision point immediately. So Starbucks is going to report on Thursday after the close. You're going to have this decision Friday morning. Like immediately you're going to know what happened, okay? If it starts to creep down, you're going to be okay. If it spikes in your face, you're going to freak out a little bit. That's why I said this is much more aggressive. But I like getting to that point quicker anyway, okay? It's like, just tell me what's going on, right? I want to know if I'm right or wrong. So I'm going to show you the same. So that's a more aggressive sort of scenario here, right? Let's see if I got normal again. We're still not normal here. Let's see if this loads up again. I just don't know what's happening here. What about let me see if I can flip this guy. No, you're not gonna flip. Oh, we got all sorts of bad stuff happening here. Okay. Charts don't want to play with us today. Fine. Fine, charts. I didn't need you anyway. Let's see if I can fire this back up, folks. Give me just a second. The fun stuff of a live show is that sometimes it doesn't always work how you want it to. Come on. Come on. Oh, really? Right away, huh? Hey, look, there's an elephant. Okay. Let's see. Ah, wunderbar. There we go. Okay. So this is what I, even if you guys are doing something like the credit short, the bear credit short, wait until tomorrow and do it towards the end of the day. Okay? And adjust your strikes accordingly. So just outside the money or just at the money. Okay, now we're back in the February contract. Now, if you are bullish on this, where's your 50-day? The 50-day is giving you some love down here at 58.50, okay? So you can use that to help anchor this a little bit. $58.50 put. Sell that, you're going to get 99 cents, simultaneously buying the 57.50 so you don't have unlimited downside risk. 71 cents is what you're giving back. So here, difference in strike price, of course, again, still just $1. 28-cent net credit, 72 cents at risk. You can make 38% on this trade, and all you need is Starbucks to trade at or above its 50-day moving average down there at 58.50. So here's a bull credit example. A little further out, Hefe, kind of what you were talking about. Short, Feb 16, 58, 58.50, 57.50. Put spread for 28-cent net credit. And again, we've talked about this in the past. If you are bullish about Starbucks, if you're bullish on Starbucks in the long run, there is no shame in selling naked puts, okay? So what do I mean by that? Well, here where we did a put spread where we sold the 58.50 and bought the 57.50, you could just sell the 58.50. Then if Starbucks trades well below that, the stock will be put to you at 58.50. But you're still going to get a much lower cost basis than where it's trading at today. And if it goes up, then you just pocket that money. So it's a way to participate in the upside if it goes up, and getting a deal to the downside, okay, as compared to today. So doing that versus just buying 100 shares of Starbucks today. That's what I'm comparing that to, okay? Now, if you want to get more aggressive with this thing, I think the real aggressive moves, a move to the highs, that puts you all the way up close to 65. Obviously, there's the 50-day. We do have quite a bit of volume right at this 58.50 level. So basically spot. This could act as a little bit of a magnet here. You guys see this? Big bar of volume. So you know there's a lot of activity down there. And it also happens to coincide with the 50-day moving average. And we've got a commodity channel index that's overbought. That's starting to creep on down. So I could definitely see a scenario where that creeps down under there. This hits the 50-day, and then after hitting the 50-day, then we start to move back up. I could totally see that happening. Something you can adjust to on the fly. Now, speaking of, so if you do think that that's going to happen, I know I'm getting a little cute here, but if you think it can reverse down and then shoot up like that, where's Bill Phillips? Where's Wild Bill Phillips when somebody needs to talk about a calendar spread? So you could sell, let's call it the 62. Let's say you sell the 62 call, you get 91 cents for that. So you get 91 cents in. And if you buy the 61, you spend 147. So here, you've got 56 cents of skin in the game. Then if Starbucks shoots up, you're going to make $1 because the 62 call that you were short. And then you're going to have to close out the 61 to cover that. So there's that. Or Starbucks stays under 62, your front call expires worthless, and then now you're holding a 61 call a little bit further out, which you could also go ahead and sell another call after that. So it's a position that you can manage. So a calendar option, calendar bull calendar spread, I suppose. Short 62, short the Jan 26th, 62. Buy Feb 16th, 61 calls for 56 cents. Net debit. Not a bad idea for you calendar bulls out there. What I think the trade that pays is going to be is the bear credit, my friends. A little bit the short one, the very aggressive one. And actually I gotta fix this because this was not supposed to say. Let me fix this. Bear credit, the short-term bear credit, which is short Jan 26th, 61.62. Call spread for 41 cent. Net credit. I'm going to give that 4 stars of risk. Meaning, that's very risky. Very risky business right there, I think. Because at the money short spread, that's risky business, my friends. Okay? For you guys who are very brave out there, who think something magical, lotto tickets from Starbucks, you got to hope for 65s on the upside, and you got to hope for a break of 58 to the downside. So you could probably buy these 64s. I wouldn't do it, though. There just has not been much movement in Starbucks following earnings, so I think this is just throwing money away. I would work on a higher beta stock in order to do it. I think it's a very, very low likelihood of success, okay? But I'm on the bear side of this. Just because it just seems to me, from a technical perspective, coming back down to this 50-day just makes all the sense in the world. And I just can't deny that. And I do think that this little uptick in the EPS estimates is just kind of window dressing. I don't even know. Okay, let me address some of this madness happening in this chat here. Everybody's talking about cat. Cat? What do you want to know about cat? It's starting to stall out a little bit here. How do you play it? It's a little hot to handle, isn't it, my friends? Stalling, perhaps. Could it be rolling over for a little bit of a retrace? It could, but how many of you have the cojones, since we've got some Latin music going on in the background, have the cojones to jump in front and short something like this? Take some bravery, my friends. This could be sort of range-bound choppy for a very long time. Look at this. So it's surprising to me to see the stock move as much as it has. This has popped up a lot of times. Let's just put this up here real quick. This has happened a lot. It's pulled up on my Dave's Daily Dive 1,000 times. And look at that. Look at those estimates. Up, up, and away. Big, huge move there. It's just hard to see how much of this is already priced in. It's too much risk there for me personally. Too much risk for me, my friends. You guys enjoy. I don't know. And even though it seems like I make snap judgments on these stocks while we're doing them, I do spend a few minutes behind the scenes doing some research. So that's why I try not to make just these snap off the cuff judgments. Because really, guys, these it's not worth much for me to do it. So there you go. I'm with you, Jim. I look at it and I just go, I can wait a little bit to see what happens. That's it. All right, folks. That's all I got for you here today on Zach's Live Trader. I want to thank you for coming out. Tomorrow I've got the GBU. Friday morning, my friends. Friday morning. We are doing the morning after Starbucks earnings. We're going to see what's happening there. Those shows are a lot less formal. Not that this thing is very formal, but I rarely even have presentations. We usually are just hanging out, looking at YouTube videos and pictures of kitties. So there you go. All right, folks. So thank you so much for hanging out with me here today on Zach's Live Trader. Yeah, maybe I should get some sun, take the top off, and go pop off. Let's see. Nope, can't do it. Still have a ton of work to do. But thank you so much, everybody, for hanging out here on Zach's Live Trader. GBU coming tomorrow, and then Friday, as always. Not as always, but this Friday, we'll do the morning after. Join us in the chat room. Shoot me those emails, livetrader@zax.com if you're not already hooked up, and we'll go from there. So thanks so much. See you all later.